Profit first, simplified, and personalized. That's what we're going to talk about today. So some of you may have heard of profit first. Some of you may have never heard of it. Some of you may have heard of it in passing and you're like, I'm aware that it exists, but I have no idea what it is. So what I want to do in today's video is summarize what is profit first, where's the concept come from. I want to talk about what, as a small business owner, you actually need to be implementing in your business to simplify it, and then how you personalize it. And so we're going to kind of hit on those three things. So Profit First is a system and a concept created by Michael Michalowicz. There is an entire book about it. And basically in this book, the concept is that we prioritize as business owners paying ourselves and creating our profits first. And so traditional accounting is your revenue, then your expenses, and whatever's left is your profit. Profit first kind of flips it inside out a little bit, where you have your revenues, you identify what you want as your profits, and you make your operating expenses, your overhead costs fit within what's left. Great concept, because it forces business owners in the most loving way to prioritize ourselves first. So that's in a nutshell what it is. So what are some of the pitfalls that I see entrepreneurs getting into when they go to implement Profit First? They are opening up too many bank accounts. They're confusing themselves. They're not utilizing them in the way that Profit First intends you to, and they're overdrafting bank accounts, resulting in sometimes hundreds of dollars of monthly fees in bank drafts or in bank overage charges. Overdraft charges. That's the word I'm looking for there. And so they're not following through on the concepts. That's the first pitfall, is that they're not moving money the way that Profit First intends you to through these bank accounts to make it work. The second pitfall I see business owners running into is that they're not getting very strategic about their percentages. So Profit First has multiple accounts, and in that system, you have an income account that funnels out to all these other accounts where money is then pulled from for your expenses. So they have a percentage that you're supposed to tie to each account based on how many accounts you have and what you're creating. So entrepreneurs often read the book, they figure out those percentages, or they just pull some percentages out of thin air and they're like, this is what I'm doing. And I want 50% into my profit account. I want 10% into this account. And that's only going to leave me with 30% of every dollar I bring in that's going to cover my overhead costs. And for some business owners that works, and for some it doesn't. But you need to get very strategic. So this is where the personalize piece comes in, which we're going to cover here in a minute. But to simplify Profit First, there really is only 3 bank accounts that you need. One can be a savings account, and 2 can be checking accounts. 1 can be a checking account, 2 savings account. If you use some of the online banks, Ally, Capital One, Novo Bank, they have what they call buckets that they've created, where everything's still in the same account, but you have buckets so you can separate it out visually on your screen and know what's what. But it eliminates the risk of overdraft fees because it's all in the same account still when money gets pulled out. So what are the accounts you need? The accounts that you need is you need to have your main primary account where income comes in and your operating expenses go out. I like to call this your operating account. All right. Sometimes I'll refer to it as an OPEX account for operating expenses, but it really is your operating account. It's your main account where money comes in when you get paid from a client, and all of your day-to-day overhead expenses get paid out of it. Then you need to have a taxes account, because this is the account, this is the piece of running a business that gets most business owners as they're going through, is that they're not setting aside money for taxes as they go. And then they're shocked when they realize how much they owe because they don't have that money set aside. So having a tax account set aside for taxes is that second account. The third account is, whether you want to call it a profit account, an owner's pay account, it's whatever that is. Now, if you have employees, you may want to also add in a payroll account as well. Or if you have contractors that you pay on a regular basis, you may want to have a contractor's pay account, just so you have that set aside. Not everybody will need that. So now that you have the simplified version of how many accounts you need, let's talk about how best to use these and how to personalize them for yourself. So your operating account should have everything that you generate coming into it. All of your deposits should go into this one account all the time, no exceptions, okay? Then this is where all of your expenses should be paid out of. So whatever software costs, whatever things you have coming out, that's where you pay. Now, if you run a business where there is a portion of your sales that come in that you know are earmarked for contractors to deliver, this is where you might want that contractor's pay account. Whereas let's say you pay out contractors 30%, and let's say you sell a service for $1,000, you automatically know $300 of that needs to get moved to the contractor's pay account. because it's earmarked. It's already being used for them, even though it hasn't been paid out yet. So you basically move it over there so that you know it's not available in your operating account because it's already being accounted for as an expense over here. Okay. So then beyond that, what happens is then you want to move some money to your tax account and to your profit or your owner's pay account. The tax account, this is the one that I see a lot of people getting their numbers flipped on this. So I'm just going to use a percentage of 25%. Please know that is not what you need to set aside for taxes. You do need to talk to your accountant and you need to know exactly what that percentage needs to be for you before you decide it. Do not just go with 25% because it is what I have used in the example here. Okay, that's my disclaimer. So let's say that your tax account is 25%. That is not 25% of revenues. That is 25% of your profits. So income minus overhead expenses, that is what your tax account is. I see so many people doing this tax account based on their revenues, and then their tax account is overflowing with excess money that they could be using elsewhere in their business. So check with your accountant on what that percentage is of your profit that you need to set aside. And then, so what some of my clients have done in the past is they're like, well, I know I need to set aside 20% according to my accountant. So I'm going to take 20% of revenues. And at the end of the month, when I know what my profit is, I'll shift back the excess into whatever account it needs to move to. It's an extra step, but it works for them. So that's how they can make that happen. All right. So then the first thing that you need to do, not that you need to do, that you might want to do to personalize profit first for you, the first thing you're going to want to do is understand what percentage of your income is going out in expenses. So you need to know what your operating expenses are as a percentage of revenue. So you need to figure this out. And once you figure this out, let's say that that's 48%. Then 48% of every dollar that comes in needs to remain in that operating account to cover those expenses. I always like to give a little bit of cushion there. So if you're at 48%, maybe you want to keep 50% there so you have a little bit of a cushion. Once you figure out that and your tax account, now you know what is left to go into your owner pay account. But what happens is people often do this backwards where they start with the owner pay amount and they're like, I want to make sure I pay myself 50% of everything that comes in, but their overhead expenses are 50%. And now they've not accounted for any tax money in there. And this is where things happen, where money has to start getting shifted back and forth and they're not keeping track of it the way that they hope to. And it's not working the way they wanted to. And they feel like they're doing something wrong. They feel like, oh my gosh, I've messed this up because I constantly feel like I'm putting money over here, but then I'm having to move it back to cover expenses, or I'm moving money here, but I always have excess and then I move it over there, but then it feels like I have to move it back to cover expenses. And so they're not doing it in a way that actually aligns with their percentages in their business. Now, the other thing to keep in mind here is you want to move money on a pretty consistent basis, but you also want to move it in alignment with how you get paid. So if you get paid, let's say that you only receive income twice a month the way your business is set up, then you don't want to be moving income every week. You want to be moving it twice a month when your pay comes in. If you get paid every day by clients, or you have random deposits based on when clients hire you, then you want to set up a weekly thing to do this. So you want to weekly go in and look at the week in review and be like, how much came in? Now, what are my percentages? What goes to my tax account? What goes to my profit account? That's how you want to do it. What happens is if you wait and you do it monthly, you may think, if you wait and do it monthly, you're going to have more money in your operating account than your operating expenses actually are. And this is where we see entrepreneurs get off track and they start spending money that's out of intention, out of alignment with their goals and their visions for their business. So make sure that you're moving it fairly consistently. If you only get paid once a month, then once a month is great. If you get paid twice a month is great. If you get paid sporadically throughout the month, doing this on a weekly basis is really how you want to kind of target this and take a look at this. So keep that piece in mind. So we've talked about profit first, we've talked about simplifying it, and we've talked about personalizing it. So if you have any questions, feel free to drop those in the comments and I will make sure to come back and answer those.